Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. The Iraqi budget for the years 2025, 2026, and 2027 has been meticulously planned, carefully structured, and strategically outlined to meet the economic and developmental needs of the country. However, when one takes a closer look at the underlying foundation of this budget, a glaring contradiction emerges: its feasibility at an exchange rate of 1310 Iraqi dinars to the US dollar. The numbers simply do not add up, and this is not just a matter of speculation. It is a matter of economic logic, fundamental financial principles, and global consensus. The very essence of a national budget is to ensure that the government's revenues and expenditures align in a manner that promotes economic stability, growth, and prosperity. For Iraq, a country rich in natural resources, particularly oil, the budget plays a pivotal role in determining the standard of living for its citizens, the functionality of its public services, and its overall economic trajectory. However, given the current exchange rate, the budget appears to be set up in a way that raises more questions than answers. One must consider the broader economic context in which this budget is being proposed. Iraq operates primarily as an oil-based economy, with the majority of its revenue coming from crude oil exports. This means that the global price of oil directly impacts the nation's financial health. When the exchange rate remains fixed at 1310 dinars per US dollar, it limits the government's ability to maneuver within the financial landscape, reducing its purchasing power, increasing the burden of imports, and placing a strain on domestic investment. To illustrate the impracticality of maintaining the 1310 exchange rate in the face of Iraq's future spending plans, one need only look at the scale and scope of the budget. The proposed budgetary allocations include ambitious infrastructure projects, public sector wages, subsidies, and investment in key economic sectors. These expenditures require a financial framework that allows for sustainable funding, which a rigid exchange rate at 1,310 does not support. One could argue that the government is fully aware of this dilemma. The very structure of the budget suggests that policymakers understand that operating at 1310 IQDR USD is not a long-term solution. Instead, it appears that the government is signaling an impending shift, one that will likely involve a revaluation or float of the dinar to better align with economic realities. The question, then, becomes, are they preparing the public for this inevitable change, or are they simply deferring the issue, hoping external factors will force their hand? The citizens of Iraq, having endured years of economic instability, war, and sanctions, are no strangers to government policies that promise more than they can deliver. However, this time, the stakes are particularly high. The 2025 to 2027 budget outlines significant investments in key areas such as education, healthcare, energy infrastructure, and defense. These commitments, if met, could transform the nation and improve the quality of life for millions. But at an exchange rate of 1310, the ability to finance these initiatives comes into question. For the average Iraqi citizen, the value of the dinar dictates daily life. It influences the cost of goods, the availability of services, and the overall economic environment in which they live. If the government maintains the 1310 rate, inflationary pressures could erode purchasing power, leading to increased hardship. On the other hand, if the dinar is allowed to appreciate or float, it could open doors for investment, trade, and economic expansion. The international financial community is also watching closely. Iraq's monetary policy is not just a domestic issue, it has regional and global implications. The IMF, the World Bank, and other financial institutions have long advised nations with resource-dependent economies to adopt flexible exchange rate policies that reflect market conditions. Holding onto a fixed or artificially managed rate for too long can create imbalances that eventually lead to financial crises. Logic dictates that the numbers must align. When expenditures outpace revenues, and when the purchasing power of a currency does not support the government's financial commitments, adjustments must be made. The entire world understands this principle, and Iraq is no exception. The very fact that the budget has been structured in a way that suggests an alternative financial reality indicates that change is not just possible but necessary. The real question is not whether Iraq can sustain a 1310 exchange rate through 2025, 2026, and 2027. The real question is how long they will continue to hold onto it before making the inevitable move. The structure of the budget itself provides clues. If the government genuinely intended to operate within the constraints of a 1310 exchange rate, we would see adjustments in spending, reductions in ambitious projects, and a more conservative fiscal policy. Instead, what we see is a roadmap for growth, one that cannot be realized under the current exchange rate. So, was the government teasing the citizens? Was this budget designed to create an illusion of prosperity that cannot be attained under the existing monetary framework? It is difficult to say with absolute certainty. However, what is clear is that the numbers do not align, and the reality of Iraq's financial situation suggests that a shift is on the horizon. Whether through a managed float, a revaluation, or a complete overhaul of its monetary policy, Iraq will have to address this issue sooner rather than later. The longer the government waits, the more economic pressures will build, and the harder the transition will be. Citizens, investors, and the international community all recognize this. Thus, the notion that Iraq can move forward with its ambitious budget while maintaining the 1310 exchange rate defies both logic and economic principles. The world agrees. Logic agrees. The numbers themselves agree. This budget is not for 1310, and sooner rather than later, Iraq will have to adjust its monetary stance to align with reality. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi dinar. See you in the next update.